Good afternoon,
Good
everyone.
afternoon, everyone.
This is another
This is
episode
another
of
episode of
MSATP. I'm
MSATP.
Walter
I'm
Moore,
Walter Moore.
and with me I
And with me, I
Arnie.
present Arnie.
He will
He will
be
be
giving us a rundown of
the highlights of
things that happen in
things that
Annapolis.
happen in Annapolis.
So take it away, Jim.
Take it away, Jim.
Thanks, Walter, and good afternoon, everyone. My role is just to give a brief overview of some of the legislation that was enacted during the 2022 session of the Maryland General Assembly. They convened January 12th and adjourned at midnight on April the 11th. This season or session, there were 420 pre-filed bills, and that compares to over 800 pre-filed bills last year. This year on the Senate side, 1,011 bills were introduced, and that does not include the 307 bond bills or 13 resolutions that were introduced. So I'm just referring to bills that would impact various laws within Maryland. And on the House side, there were 1,487 bills introduced, not including 287 bond bills and 9 resolutions. And if you compare that to last year there were 967 Senate bills. That's about 44 more bills this year than last year. And on the House side, last year there were 1,380 bills, and that's 107 more bills this year than last year. I thought there may be more bills introduced this year since it's an election year. I've gone back and looked at various election years. The previous election year, 2018, there were over 3,100 bills introduced. But you have to go back to 2002 to find an election year in which there were fewer bills introduced than what were introduced this year. And when you look at the bills that were referred to the society this year, 163 bills out of the 2,498 were referred to the society. They look at them to determine if the society should take a position on any bills or just track them, monitor them, and so forth. Of the 163 bills, 60 bills were related to personal income tax, and that's 37% of the 163 bills. And if you go back and look over the years, that's just about on target on the number of personal income tax bills that get introduced that the society would be interested in. So we'll begin with personal income tax. House Bill 172 is income tax determination of taxable income, union dues and expenses to influence collective bargaining. This provides for subtraction modification of the amount of union dues that an individual paid during the tax year. And the law says that the subtraction allowed includes the amount of union dues paid by an individual during the taxable year that would have been allowed as a deduction under Section 162 of the Internal Revenue Code without regard to the limitation imposed by Section 67 of the Internal Revenue Code. So that's a new subtraction modification. Another new one was House Bill 186. This is a subtraction modification for centenarians. So beginning with tax year 2022, any taxpayer that was 100 years of age or higher on the last calendar day of that tax year, they get a subtraction modification of the first $100,000 of income. This has been introduced several years. It started out this year at $50,000, but was amended or changed to include the first $100,000 of income. The next bill, there's two, and of the first two bills I mentioned, they have not been signed into law yet. The next bill is income tax, retirement income subtraction modifications, and senior credit. House Bill 1468 and Senate Bill 405. Both bills have been signed by the governor. These bills do two things, and I'll start with beginning in tax year 2022. The bills allow all eligible individuals for retired law enforcement, correctional officer, and fire, rescue, and emergency services personnel who are at least age 55 to exempt the first $15,000 in qualified retirement income. And this subtraction modification is not reduced by the amount of any Social Security benefits received and replaces the existing subtraction modification that can be claimed under the current law. So anybody that retires from those types of employment, they get off the top a subtraction modification of $15,000. And if the individual is 65 or over, they then can claim the pension exclusion for being over 65, but the $15,000 used in the first subtraction cannot be used as part of the pension exclusion income. You don't get to double dip that subtraction. And then for the other taxpayers over 65 that are just retired, there's a credit being allowed if you're a single taxpayer and your income, federal adjusted gross income, is $100,000 or less. You get a $1,000 credit, and that's a credit against the state income tax. That's dollar for dollar. So you get a $1,000 credit against your income tax liability. If you're married filing joint or surviving spouse or head of household, and your federal adjusted gross income is between 100 and 150 or less than $150,000, then you get a credit of $1,750. And when you think about it, you can estimate that the state and local taxes right around 8%. So what this is doing, it would be giving you equivalent to a subtraction modification of about $12,500. You take 8% of 12.5 would be the credit of $1,000. And there's also a provision in there that for each tax year in which the current fiscal year general fund estimate in the September Board of Revenue Estimates report is more than 7.5% below the March general fund estimate issued in the same year, the amount of the tax credit is limited to one. Instead of $1,000, it would be $500 for an individual whose federal adjusted gross income is between $50,000 and $100,000, and $875 for married filing jointly, surviving spouse or head of household whose income was between $100,000 and $150,000. So that's the provision that is applicable for the big no retirement tax, so to speak, that the governor started out with. He wanted to eliminate it totally, but that got gutted, and this is what ended up taking its place. Better than nothing, but if you're single and have income, federal adjusted gross over 100,000, or married filing joint, and your federal adjusted gross is over 150,000, then you get no benefit. And like I said, both of those bills have been signed into law.
Hi, Jim. Sorry about that.
Not a problem.
I got tied up on a phone call with the IRS, and unfortunately, that's what happens sometimes.
I understand. Nope, not a problem.
And I actually got a live person, so I had to talk to him.
Isn't that the truth? You're gonna have to share your secrets with everybody on how you get a live person. There's a couple other personal tax bills, income tax credit and grant program for energy storage system. They're somewhat limited and so forth. That one extends the energy storage credit for 2 additional years through 2024. And basically what it does on the grant program, if you install an energy system that saves the energy on a personal residence, it's the lesser of $5,000 or 30% of the total installed cost of the system. So 30% of say $16,000 would be $4,800. So if you spend just a little over $16,000 on your residential home to capture the energy and so forth, you would get the lesser of that 30% or $5,000. On a commercial property, it's a lesser of $150,000 or 30% of the total installed cost.
Okay. You may have already covered this, Jim, but did you talk about the mandatory employee sick pay?
I'm coming up on that.
Oh, okay.
And to make sure I have time, I will not talk about the personal income tax bill so much, but I do want to touch base on a number of sales and use tax bills, because this was the year that they made a number of items sales tax free.
We always like to hear that.
Oh yeah. The first one is sales and use tax, diapers and baby products. And there's 3 bills that fall under this: House Bill 282, House Bill 288, and Senate Bill 316. They've all been signed by the governor. And those 3 bills exempts from the state sales and use tax the sale of the following items: diapers, diaper rash cream, baby wipes, baby bottles, baby bottle nipples, and infant car seats.
Okay.
The second one, sales and use tax on medical devices, House Bill 364, Senate Bill 488. Both have been signed by the governor, and it exempts medical or clinical thermometers, pulse oximeters, blood pressure monitors, and 4 is a large variety. It specifies which ones: of filtering face piece respirator. It's like a N95, China KN95, and so forth. I'm not going to read all of them.
Right.
Oral hygiene products. The items that are exempt are, and it's House Bill 492 and Senate Bill 571. Both have been signed by the governor. This will exempt toothbrushes, toothpaste, tooth powders, mouthwash, dental floss, or similar oral hygiene products from sales tax.
Well, that's good. That'll save everybody.
Oh, yeah. And sales and use tax, diabetic care products, House Bill 1151, signed by the governor. The diabetic care items include insulin, glucose tablets, glucose drinks, glucose gels, blood and urine ketone meters and supplies, insulin pumps, insulin pump infusion sets, insulin pump reservoirs or cartridges, continuous glucose monitors, and related.
That's great. I wear an insulin pump, so now all that stuff's going to come to me sales tax free.
Absolutely. And related supplies, syringes, insulin injection devices, insulin pens, insulin pen needles, lancelets and lancelet devices, and testing strips for measuring blood sugar. And these bills take effect July 1, 2022. One I'll touch base on because was a big one, I think when it was enacted, I can't recall if it was last year or 2 years ago, with dealing with the sales and use tax digital product. It specifies that the following are not considered digital products. And this is House Bill 791, Senate Bill 723. They have not been signed into law. But a product having electrical, digital, magnetic, wireless, optical, electromagnetic, or similar capabilities where the purchaser holds a copyright or other intellectual property interested in product in whole or in part, if the purchaser uses the product solely for commercial purposes, including advertising or other marketing activities, and computer software or software as a service purchased or licensed solely for commercial purposes in an enterprise computer system, including operating programs or application software for the exclusive use of the enterprise software system, which is housed or maintained by the purchaser or on a cloud server, whether hosted by the purchaser, the software vendor, or a third party.
Okay.
So those are no longer considered as a digital product.
Okay. Good.
Under small businesses, the work opportunity tax credit, House Bill 2, Senate Bill 598, both have been signed into law. And what this does there's a federal work opportunity tax credit program. This allows you 50% of whatever your federal tax credit was, to kind of put it in simple wording.
Okay.
The one you were asking about, Bill, is the Labor and Employment, Family and Medical Leave Insurance Program, establishment, and so forth. House Bill 496, Senate Bill 275, and the governor so far has signed only Senate Bill 275. And one bill was written from scratch. Another one, I guess, was written and got gutted, so to speak, because the one bill is 36 pages long. The other bill is 63 pages. So I'm going to hit on a couple highlights that I think are important.
Well, real quick, didn't the governor veto this in the beginning?
Yes, it was overridden.
It was overridden, but only at the Senate level, not at the House. Because the session's over, so they're not going to be revisiting this.
No, they can't.
Because it's election year.
Right, and they've had time to veto it.
To override his veto.
Yes.
So that means that the bill doesn't come into play?
I would say yes. But let me see, real quick, history. Yes, it was gubernatorial override. Just wanted to make sure.
So that bill doesn't come into play at all?
No, but 275 does. So 275 is now law.
Okay.
It's chapter 48 because he vetoed it, and it was overridden in the Senate 30-16, overridden in the House 94-44, and it became law because they overrode it.
Okay.
This bill provides health care for employees. And I encourage everybody in the society to read Senate Bill 275 because it's very complex and it gives you a lot of definitions and so forth. For example, covered employee means an employee who has worked at least 680 hours over the 12-month period immediately preceding the date on which leave is to begin. Now, you've got to realize that 680 hours does not mean solely working for you. If they work 300 hours for another employer, leave that employer and come to work for you, and then when they work for you 380 hours with the additional 300 from the previous employer, they then qualify, as long as it's during that 12-month period before the leave is to begin.
Wow, maybe you could work on putting Senate Bill 75 together, so that we can send that out to the Free State Accountant next quarter.
I'll do my best. It's very complex. And the one thing and by the way, the society opposed this bill in writing because they didn't carve out initially, and I'm not going to say it still does to a certain extent, it didn't carve out small businesses or small employers initially. But what the law reads now is, let me find it here. Basically what it says, because the employee can be responsible for making contributions to this fund, and the employer can be responsible for making it. However, the bill spells out that employer that has to make contributions if they have 15 or more employees. So an employer that's got 14 or fewer employees, they are not required by this bill, this law, to make contributions to the fund.
To the insurance fund.
Yes, only the
But they still
employee.
have to provide the benefit to the employee.
Exactly, but they don't have to contribute. It specifies in there that beginning October 1, 2023, each employee of an employer and each employer with 15 or more employees and each self-employed individual participating in the program, if they so elect, shall contribute to the fund. So the contributions will begin October 1st, 2023, and then beginning January 1, 2025, each employee of an employer and each self-employed individual participating in the program may begin taking leave. And the purpose for that difference in time is to allow the fund to accumulate money so that when employees request and get the leave, they've got money set aside for it.
So has anybody determined who's going to oversee this fund?
The Department of Labor.
So it's going to be an insurance policy that you pay on, just like unemployment insurance.
Basically, yes. And they didn't initially in the bill they came up with how much the contribution would be, and that was removed, and it's going to be up to the secretary to conduct a study to see what the contribution amount will be, so that beginning October 1, 2023, the employees and the required employers that have to contribute will know. And it appears that in the law, they did state the cost share. The secretary every 2 years can determine it. And it sounds like it's going to be alternating, because what I read, it says 75% paid by the employers and 25% paid by the employees, and then alternating 25% paid by the employers and 75% paid by the employees. Why they didn't just say 50-50 is beyond me.
Right. Well, one of the other things about that is, what if somebody makes the claim before there's enough money paid into the insurance fund? Is somebody going to be responsible for increased rates like it is on unemployment to make up that money?
I didn't see anything in the bill, but in trying to do a write-up, I will spend obviously more time reviewing that bill and trying to analyze it. And
sure, because this could be pretty substantial to our membership.
I'm really, I agree, and I'm surprised it passed, because in the hearing, I listened to the hearing, and Washington State had a bill passed that was very similar to what Maryland was introducing, and guess what? That fund is bankrupt.
Oh, is that right?
Yeah. So I was surprised that it really survived.
Mhm. I can see the state using up their whole surplus on this one.
Yep. So that was what I was going to cover on that bill, just to get the key points of it. From that standpoint, I just want to touch base on a couple more because I know we're running out of time. Under what I call regulatory, House Bill 366 and Senate Bill 477 passed. They have not been signed into law, but this is where the Comptroller's Office will establish a legal division and be responsible for issuing private letter ruling letters as the IRS does. And the society
Supports that.
support that with written testimony.
We got about three more minutes, Jim.
Okay. States and trusts, corporations. I just want to touch base on that one we talked about, and I pointed out during the session, Delegate Learman introduced that House Bill 366, and she's running for the controller's position. The society also, just so everyone is, as I stated earlier, was opposed, did written testimony on Senate Bill 275 opposing it, but it got through. And I believe we supported House Bill 722, corporations and associations annual reports to eliminate the filing fees if they're filed electronically.
Yes.
But unfortunately, that bill died in committee.
Figures.
As well as House Bill 409, which was a very similar bill. Very similar. That was the electronic filing. The other one was the annual reports.
Right.
But they wanted the revenue. So that just in a thumbnail sketch, because of time limitations, that would be the most that I can get in this time period.
Okay.
But I'll write something up on that health bill for the next presentation. Just
that would be nice. Because I think this one is really going to affect all of our members.
Absolutely. Yes, because even if they have fewer than 15 employees, they have 14 or fewer, the employees can still participate.
That's correct. And the employer, though, may not be required to fund the insurance fund, but they're still going to have to provide the employee with that time off.
Exactly. And just have Walter email me and give me the time period that he's looking at that I need to complete that by, so I can measure it. Any questions that you are aware of?
How many bills total were introduced this year?
2,498.
Okay.
And very quickly, I can summarize that. There was 1,101 Senate bills and I think 1,300 and some House bills, 2,490. And you had to go back. I thought since it was an election year, it would be a lot more. I had to go back to 2002 looking at all the election years to find a year where there were fewer than 2,498 bills introduced. But this year, that was slightly more, 44 more Senate bills this year than last year, and 107 more House bills were filed this year than last year. And there were 420 pre-filed bills this year, over 800 last year.
Wow.
But I think we're starting to see the inner workings of the new president of the Senate and Speaker of the House, since Miller and Bush are no longer with us.
Right.
So,
All right, well, Jim, thank you very much for taking your time out of your schedule to join us today. And I look forward to seeing you shortly. And if I don't see you before then, I'm sure I'll see you at the May convention.
absolutely, I'll be there.
All right, and everybody, don't forget the May convention in Ocean City. We're all looking forward to it.
Thanks, Bill.
Take care. Have a good day.
Thanks, you too.
Bye.
Bye.